Listen, let's talk about these gas stocks for a second because nat gas has been pulling back, and finally, Sandridge and Range Resources and these types of nat gas stocks have been pulling back. Do you view this as a buy on dip on these things now that they're doing this kind of a pullback?
Well, I wouldn't buy Range Resources with your money. But no, look, Sandridge, I think we've talked about this in the show.
Yeah.
I'm long some. I sold some calls against it. Turned out to be the right trade. Those guys are selling that gas at a 4 or 5 handle, and the whole balance sheet's cash. It's like a third to half the balance sheet's cash now. They have no debt. Look, it's a cheap security here below 10, but I sold the calls against it. I've sold some on the way up. I like buying these things when everyone hates them. We're kind of in the middle of the move here. It's probably going higher, but I don't feel so strongly that I'd add because, quite honestly, I was selling on the way up, and I don't feel so strongly that I'm looking to do damn near anything except capture some of that sweet 85 vol. So
Yeah,
no.
that's a pretty rich vol up there. How about your take on these uraniums? Obviously, that's also a very popular trade. And what's your take on this?
So let's go back a second, okay? Because I think you jump in the gun. You have two things that are happening in the markets right now. So everyone's locking in their year. And the other thing you're happening is that you have a lot of funds that own the same 50 stocks, okay? Every hedge fund has just been piling into the same 50 names. It's the SaaS compounders. It's the compounder bros. And they get more inflows. They buy more of it. They get more inflows. And, it's so far past the point of caring about the valuation. Once it gets past 10 times revenue, do you care if you pay 40 versus 60 times revenue? It doesn't really matter. It's, especially just up to the right. And so you had this company Docu that warned today. They missed. That was last night. They missed missed by a penny sort of thing. It's a little more than that, but whatever. And they clobbered the thing. It's down 40%. And it turns out it's the biggest hedge fund hotel of all of them. And I think it's setting off margin calls and liquidations all over the place. Some of these stocks have been leaking for a while. The ARC names have been leaking for a while, the Teladocs of the world and all the other things that are Ponzi. But now you're getting to the stuff that's not quite Ponzi. There's actually profits here. It's just 200 times profits, And so this stuff's starting to get liquidated. And these hedge funds, as you know, hedge funds like to do, they take a good idea and then they keep doing it. They keep doing it and they add leverage to it. And then it always blows up. And, it's just I bet you everyone in Manhattan is along the same 50 stocks. And they're all calling each other up and saying, what's going on? What's going on is they're all selling. They're all having a margin call. And so I think it's going to keep going for quite a while because, when you go from a growth stock and it kind of goes no bid, you need it to drop to a price where guys like me show up. I'm a curmudgeon value guy, and I'm not buying it at 40 times revenue down from 60 times revenue. I kind of want to pay 7 times cash flow.
Well, that makes sense. So you were mentioning ARC there. Do you think? I guess this is the end of the Ponzi trade for you, isn't it? Is this where? Obviously you think it's going to keep going. What do you make of what's happening with ARC and all these crypto ETFs and everything?
Well, the whole Ponzi sector is blowing up, and the same, crypto bros own the ARC names. It's all Crust owned, okay? So, you'll have sophisticated, well-respected hedge funds in New York that have billions and billions of dollars of this crap, and they don't own Tesla. They're probably short Tesla, but they own all the other stuff she owns. And so when a little bit of the neighborhood gets torched, it's this forest fire just burns through the whole neighborhood. And I think that's what you're starting to see happen with uranium and with oil. Oil was a crowded trade. People were talking about it. The smart guys owned it. Uranium also, the smart guys own it, and the wise guys own it. And it's why you see the Sprott vehicle trading to the biggest discount to NAV since the ATM started. This is because guys just need liquidity and they just need to hit bids. And so they're just hitting bids. And, I think it's going to get worse before it gets better on a lot of these products, but it's all kind of tied together. It's kind of funny because when I look at my screen at the stuff that I own that's up on the day, and I actually have a lot of stuff that's up on the day, it's the stuff that no one's really talking about on Twitter. It's the stuff that, most people don't even know I own. And then you see some of this other stuff and it's just getting roasted.
Yeah.